Hello and welcome to Introduction to Stocks 101. Are you curious about stocks and how they work? You've come to the right place. In this lesson, we'll break down the basics of investing in stocks, making it simple and easy to understand. Firstly, what are stocks? Stocks represent ownership in a company. When you buy a stock, you become a shareholder, meaning you own a part of that company. Companies issue stocks to raise money for various purposes, such as expanding their business or developing new products. There are two main types of stocks: common stocks and preferred stocks. Common stocks usually come with voting rights, allowing shareholders to vote on company matters. Preferred stocks, on the other hand, typically don't have voting rights, but offer a fixed dividend, making them more stable. Now, let's talk about why people invest in stocks. The primary reason is to make money. Investors can earn returns in two ways: through capital gains and dividends. Capital gains occur when you sell a stock for more than you paid for it. Dividends are payments made by a company to its shareholders, usually from its profits. However, investing in stocks also comes with risks. Stock prices can fluctuate due to various factors, such as economic conditions, company performance, and market trends. It's important to do your research and understand these risks before investing. Finally, where can you buy stocks? Stocks are bought and sold on stock exchanges, such as the New York Stock Exchange or the Nasdaq. You can purchase stocks through a brokerage account, which can be opened with a financial institution or an online broker. And that's a brief introduction to stocks. Remember, investing is a journey that requires continuous learning and careful planning. Start with the basics, do your research, and you'll be well on your way to making informed investment decisions. Thanks for watching, and happy investing.